Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, the Aussie Royal Commission into banking is doing some market damage, and a few large banks are cashing in. But first, on Wall Street, key equipment maker and exporter Caterpillar raised its full-year profit outlook for earnings for the second quarter that nearly doubled, beating market expectations, helped by global demand for its equipment. However, overall market indexes are lower, with the tech sector down a very sharp 1.25%. And pending home sales in the US have disappointed as well. In June, they've come in 4% lower than the same month a year ago. In Japan, markets are on tenterhooks waiting for their central bank's latest policy tweaks. Speculation and market signals both are betting that interest rates will be allowed to rise. In Germany, the July CPI rise has come in at 2%, and that was both lower than June's 2.1% and lower than markets were expecting. And Deutsche Bank has moved the clearing of a large part of its euro-denominated derivatives trades from London to Frankfurt as financial firms ramp up their Brexit preparations. G20 agricultural ministers are claiming a huge breakthrough. They issued a joint statement confirming their commitment to the WTO and against unilateral protectionism. US objections were noted and sidelined. One thing they didn't do, however, is commit to reducing existing tariffs. In Australia, more unintended consequences are emerging in the pricing of home loans. The smaller players are being caught up in wholesale cost pressures and passing on higher rates. But today, giant CBA has actually lowered rates for some key fixed terms, putting some distance between them and many rivals. The Hayne Commission is roiling the risk profiles of many smaller institutions and making the largest stronger. The CBA move comes even as analyst Moody's sees the smaller banks' hikes clearing the way for majors to follow. One thing is clear, no one seems to know where the chips will fall and will stay confused until the final Hayne report is released and official policy action from it becomes clearer. Right now, it's murky and working against consumers most of the time. US Treasury 10-year yield is up 2 basis points to 2.98%. Their 2-10 curve has steepened to over 30 basis points. The Chinese 10-year is at 3.54%. That's down 2 basis points from this time yesterday, while the New Zealand equivalent is now at 2.76%. That's unchanged. Gold is also unchanged at $1,222 an ounce in New York. US oil prices have jumped sharply today, now just on $70 a barrel. The Brent benchmark is now just over $74.50 a barrel. The Kiwi dollar will open today at 68.3 US cents and showing some month-end firming. On the cross rates, we're also firm at 92.1 Aussie cents and 58.3 euro cents. That puts the TWI at 71.6 and right at the top of its range. True, it's a very narrow range, but the top of its range for all of July. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.